Kian Soon, CEO and fund manager at Astral Asset Management. So, Kian Soon, just looking at the performance on the mainland today, are we back in the running for a bull market on the mainland?
I think this is definitely going to be a great year for the China and the Hong Kong markets as the economy fully reopens and the removal of the restrictions of COVID-0 policies.
All right, talk to us about the kind of sectors that you're bullish on beyond the travel-related names.
I think from the start, right, what we have seen is the F&B, the banquet, the movie, the theatre sectors have all benefited tremendously as the Chinese have traveled and gathered with their families, friends for the Chinese New Year festivals. And at the same time, we see that domestic travel has definitely picked up. International travel will definitely take some time because people needs to get the passports, visas ready. The flights needs to be resumed for a lot of the international legs. And at the same time, I think countries need to, be aligned with their immigration policies and be comfortable with large-scale tourist arrivals from China. So that is going to be the next stage where we see that, probably the 1st of May 2023 is the period where international travel is going to really pick up for China. Following that, I think there's a phase 2 of the revenge consumption story for China. Interestingly, it will be the consumption of the luxury products. We're talking about luxury handbags, watches, cars, and more expensive items, jewelry, because after all, they have not spent for the last couple of years. And in part of the revenge consumption stories, people are likely to splurge, and we're going to see improvements in terms of revenue taking from all these sectors that I mentioned.
Overall, we're seeing a faster than expected resumption of consumption and services in the country thanks to the Chinese New Year period as well. What is this going to mean for how accommodative the PBOC can continue being? Does that at all affect what you factor into the earnings growth for Chinese assets?
I think in terms of economic growth for China, they're definitely looking for huge growth this year. So in terms of government policies from PBOC and from other government bodies, it's going to be extremely accommodative. We're going to see the encouragement for consumers to spend. We're going to see investments pouring into factories, manufacturing, productions. It will be a boost year for the Chinese government as they badly needs to get the economic activity going and get the economic growth to resume to 5 to 6%. So we're going to see a lot of accommodative policies in 2023.
What about U.S. central bank policy? It's certainly not accommodative, but how much less hawkish do you think it's going to be for this year?
In terms of the U.S. central bank policies, it's quite interesting because the market have huge expectations that interest rates will peak and then will start to decline this year following a sharp rise in interest rate we have seen in 2022. The interesting observation I made is, the market somehow is not ready, if the central banks do not reduce interest rate this year. There's a scenario where interest rate will remain high as a result of high inflation and as a result of a strong economy, as we have seen from the most recent employment figures released by the United States, that economic activity has not shown any signs of cooling down. At the same time, inflation is high at 4 to 5%, and interest rates, unfortunately, under such situations, will continue to be high.
Right. So another reminder of how we shouldn't fight the Fed, but how do we beat inflation?
I guess in terms of beating inflation, if you're putting all your money in money market funds generating 4%, or you're putting money just in fixed income products, you actually will have a problem beating inflation. Unfortunately, investors would like to look at this issue short term, but if you are a long-term investors and you are trying to beat the market, you're trying to beat inflation, you should look at your whole investment portfolio for the long term and have allocations to equities, real estate, and other asset classes, and not over-allocate, to fixed income products and cash management products, which is giving you an attractive yield, but unfortunately does not beat inflation at the current situation.
Kian Soon, talk to us also about your assessment of the geopolitical risks of the rivalry between the US and China. As you look long term, what is that going to mean for your portfolio?
I reckon the rivalry will have existed for a couple of years. It have become more intense, as we have seen on all the limitations on the semiconductor chips, and I don't think it will go away immediately or in any time in the near future. So investors should, be aware of this rivalry and this competition that will continue to be around between United States and China. Somehow, on certain occasions, the situation will be improved because of meetings, because of some collaborations, and because of some understanding or memorandum of understanding that they have signed. Often, the situation might become more tense, and this is going to be the situation going forward, where we could see the world have two kinds of systems. As the investors, you need to be fully aware. You need to be aware that the trade tensions will be there. You need to be aware of sectors that are very dependent on these kind of relationships between the two global giants. So going forward, investors could also choose, not to put all their eggs in one basket, as we always say. They should have allocations in around the world as well as in China, in America, so that they could catch the upside on either, if either situations unfold. The advice would be diversifications. The advice would be, try to understand how the mutual and more intense competition will somehow, strain certain industries and segments that will be affected more significantly than others.
All right, Kian Soon, thanks very much for sharing your insights with us. Kian Soon, CEO and Fund Manager at Astral Asset Management.